Hello and welcome into the KE Report. Chad and Corey here, getting an update from Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And Sean, always great to get you on the call every couple of weeks just to see what's floating your boat here in the markets. And there's the haves and the have-nots. This week, we've seen some pressure in the precious metals, gold and silver, as the US dollar has increased, as interest rates have increased. And there's also the China factor. And you were talking about that a little bit off mic. I'd love you to elaborate how you're looking at things in the precious metal sector as it relates to the US, but also as it relates to China.
Yeah, well, we had a nice run in the precious metals. Some kind of a pullback, would be normal and necessary, but I think it's getting more of a pullback because of what's going on in China. Even though they announced some nice stimulus over there, it wasn't enough. That's basically what investors are telling the government there. Either it wasn't enough or it's not clear what you're doing. Though I think they actually made it quite clear what they're doing with a lot of stuff. Apparently, they want more details and they want more stimulus. And so because of that, metals are just selling off hard. Anything industrial is, you have copper down 2.4%, but silver is down more than 4%. Silver is an industrial metal along with being a precious metal, but I mean, it's just getting whacked. It's still holding above 30, which is kind of important support. So we'll see how things go there. But yeah, so this thing in China, I expect more stimulus to come down the pike. In fact, I had an article on this on Weiss Ratings Daily talking about the other times when the Chinese did big stimulus, they kept piling on more and more stimulus. So this shouldn't go that different from last time and the time before that. So, this pullback is a buying opportunity for those people who actually want to buy that stuff. I have plenty of gold and silver. I could buy more, but it would have to get a lot cheaper because I have some nice profits where I am now. So I'm just kind of happy just to ride this thing out.
Well, and to that point there, Sean, look, like gold is down, but it's still above 2,600, right? It hasn't even given up $100 from some of the recent highs. Silver, that's also been on a run, but that's still above $30, and copper is still right around 450. So all these metals have still done fairly well. And I'm even noticing on my screen when it comes to the gold stocks, look, GDX is down less than 1% today. It's fighting its way back. Silver is down. SIL, the silver miners, that's only down about 1% when, as you said, silver's down 4%. Are you seeing any maybe weathering of the storm in the stocks within the precious metals, or are you seeing weakness across the board there?
Well, mine are generally weaker, but that's okay. I mean, I just called up a chart of the GDX, and you can see how this thing has been channeling higher, and it's very close to the bottom of its channel now. Maybe that's why we're seeing buying, is people are just expecting more of the same. They expect that it's going to keep channeling higher, and so now they want to buy it. And oftentimes you see the miners move in anticipation of what's going to happen with the metals. The strength in the miners just tells me that, generally speaking, investors are expecting that we will see a floor in the metals and like some kind of rebound. That said, this kind of fast and furious sell-off is no fun for anyone. I feel bad for anyone who bought recently, but just take a longer term look at these things. And, you just have to ride these things out. We've all learned that in the precious metals before. And there's a lot of bullish things going on for precious metals, including the fact that the central banks of the world seem intent on creating more fiat money than anyone ever thought possible. I mean, there's more electronic money being created. So therefore, that makes hard money look really, really good. And just the uncertainty and the general chaos in the world, we are seeing central banks of the world turn to gold as a safe harbor because of all the uncertainty and all the chaos going on, not only in places like Iran and Ukraine and like stuff like that, but elsewhere. Just there's a general fear of like stuff going on. And personally, I mean, I hate to make election predictions, but I'll just give you an if then. If Kamala Harris wins the election, I expect the people who do not like Kamala Harris will really look for alternatives to do with their money because they would rather not pay taxes. And one place you can hide money if you have an offshore account is you can just start buying gold. We've seen that happen in the past. And that's another thing. I think offshore accounts are going to start to get more popular if like that kind of thing happens. Yeah. But, again, that's all ifs and thens and short-term stuff. Longer term, just the picture looks so good for gold. My own target is over $6,000 an ounce. It'll take a few years, but we are going to have an easing cycle. And that's one of the other things that's kind of ticking off investors now, is that the jobs numbers were so strong, they believe that the Fed not only won't cut 50 basis points in November, they've lowered the prediction on if the Fed will cut 25 basis points. And the market loves free money. It just lives for the promise of free money. And if the idea of free money gets taken away, then you start to see traders acting out. That's kind of what we're seeing in precious metals here. So it's a bunch of things coming together, but none of it's long term. It's all short term. And so longer term, I'm extremely bullish on these things.
Yeah, Sean, such a good point not to get stuck into the noise of the short-term gyrations. There's the election concerns, there's the Fed rate cutting cycle, gearing up, but maybe not gearing up as fast as people want. Even this China factor will blow over in a couple of weeks. So looking at the longer term, both gold and even the gold equities still set up for higher prices. You're not alone in that kind of higher target zone. But you mentioned off mic that there's other sectors to pay attention to, that in the general equities, you're still looking at certain parts of the tech sector, and you're even looking at parts of the reindustrialization of America stock. So maybe walk us through some of the areas that have your attention this week.
Okay, well, you and I were chatting about a pick that I gave my Super Cycle investor subscribers recently. That one is Quant Services. Now, what that company does basically is it builds electrical infrastructure. Not only electrical infrastructure, it also builds and repairs the power grid, renewables, communications, pipelines, green energy stuff, and it also does things with the electrification of everything and electric vehicles. So it's really well positioned for the reindustrialization of America. It was already getting a lot more money because of things like the bipartisan infrastructure law and the Inflation Reduction Act, which, even though it's supposedly focused on inflation, it also had money in there for like green energy, stuff like that. And these are ongoing programs that put many billions of dollars into the economy year after year after year. And Quanta's just standing there with a bucket ready to pick all that stuff up. So they're doing well, and they had a breakout last month, and then they kind of consolidated a little bit. And now they're starting to break out again. Why? Well, one reason has to be is that its employees are heavily involved in like cleanup after hurricanes. Hurricane Helene already got a huge chunk of the Quant Services workforce out there, like 4,000 people. I expect the same thing will happen with Hurricane Milton, because all that electric infrastructure is just going to be ripped up. So they're going to have their dance cards filled for a long time. I can't help but think that's going to be very good for their revenues down the road. And it's not profiteering. This work needs to be done. People need their lights on. So it's a good move for them. They're a good, efficient company anyway, and lots of cash flow for them. So that's the kind of thing. I'm happy to add that to the reindustrialization of America portfolio. I was hoping for a deeper pullback. I didn't get one, so now I'm just picking the thing up.
What about tying this all into the need that we keep hearing about for more energy? Uranium stocks have bounced. Look at even crude. Crude quickly rebounded after it dropped below $70 a barrel, down to about $65, $66, and it ran the whole way up to 78 as of yesterday, but then today is also getting hit. How do you tie in that play or your overall strategy to the need for more electricity as we continue to move forward in the world?
Yeah, well, we are certainly seeing that, and which brings up nuclear power, because we've seen Microsoft and now Google exploring nuclear power plants as a way to keep their AI centers going. And the current forecast, which I believe is low, is that the U.S. will see electricity demand increase 2.4% through 2030. 1% of that is just supposed to be electricity for AI data centers. So that's huge. I think that it's actually going to be larger. A solution to that would be to come up with much more efficient chips, but they haven't done it yet. And so that means much more electricity demand. Plus, there's the Internet of Things, there's the electrification of like everything. I think that we are going to become more electric in a hurry. Now, this makes our entire nation more vulnerable to natural disasters like hurricanes. That's absolutely true. But it's also easier when you aren't having a disaster to have everything electrified. We're a lazy country. We like things, nice and easy. So you can see the appeal of this. So that's a boost for Quant Services as well. And they also purchased a company called Cupertino Electric, which specializes in modular data center electrical systems. So they're going to be being hired to install the stuff that is required for all these AI data centers. So there's all these different angles. This is just one stock that I'm talking about, but there's other companies as well that are involved in things like the reindustrialization of America, the electrification of everything. There's some great opportunities out there. They aren't super fast growers. They aren't like, say, NVIDIA, for example, which I believe that the CEO just came out and said demand for its new chips is quote unquote insane. That has to make anyone bullish, even if you think that stock is overvalued. So these aren't the super fast growers like that, but they're steady. These projects take time, often years. And so these companies can expect to make money over and over and over again. They don't really have a business cycle that way. It's more of a project cycle, and they have big backlogs for all this stuff. So, it's a good place to put your money, especially if you can find ones that pay decent dividends. Quantum pays a very small dividend, but there are other ones out there that actually look pretty good. So I'm just saying that's an area that investors should be looking at.
Yeah, Sean, a lot of people on the show have been mentioning the strength in utilities. They pay nice dividends. They tie into the electricity theme, and they're kind of a slow and steady growth vehicle. And they've had a pretty good run. Just focusing more on the nuclear side of things, because we do have a lot of folks that follow the uranium equities, but also there's the companies that do small modular reactors that are gaining traction. Do you have a preference over the, uranium stocks versus the companies building the infrastructure for new nuclear power?
Well, I like them all, and I'm working on a report that's going to be promoted for Wealth Megatrends, so I don't want to release any names. There's a lot of good names in there, or at least I should say there's a lot of names. Some of them are good, but especially the miners. I mean, the North American miners are really in the catbird seat as long as they're not run by screw-ups. I mean, you have to have good management, but if you have good management, they are just going to have fire hoses of money pointed at them for the next few years as the U.S. tries to make up for the fact that we buy a lot of our nuclear fuel from Russia. The U.S. does not want to do that anymore. And I know that I've mentioned the war cycle to you guys before. It's definitely on the increase. And in fact, I think we're in like a low-grade World War III right now, simply because of the fact that if you're in Ukraine, you have equipment from like 15 different countries involved in that conflict. So even if countries aren't actively sending troops to Ukraine, they're sending equipment. Or else, even if they aren't actively sending the equipment, someone's buying equipment made in those countries and shipping it there anyway. And so things are just going to get worse and worse with that. Just to stick with the war cycle for a minute, we are seeing not only drones used, but AI get used in drones. And once you make drones fully autonomous, which is happening now, the Ukrainians have this AI flamethrower drone flying around. It's like a freaking dragon. It scares the crap out of me. I wouldn't want to be on the ground with like that thing around. Once you have that involved, then you can have wars fought by robots, which means much more AI. And so that again increases the cycle again. But I see some tremendous potential here for all these things. Bring it back to uranium. That's what we got in. I expect the split between the Eastern powers, Russia, China, stuff like that, and the Western powers on things like uranium to get worse and worse, which means that for these small miners in like North America, Australia, other Western friendly places, really that is going to be a lot of money coming their way just to get them to expand production as soon as possible. It then has to be processed. You just can't take uranium and put that in a nuclear power plant. I think most people know that. That's a whole nother angle to it that has to be done. That infrastructure has to be built up as well. But yeah, that's an industry, that's a sector that I feel very strongly bullish about. And in fact, when I'm in New Orleans for the New Orleans Investment Conference, that will be the topic of my discussion, is the opportunities in uranium and in nuclear power going forward. I just think they're outstanding.
All right. Well, we'll wrap it up there for today, Sean, but we'll see you there in New Orleans for that talk. And if people listening in want to check out that show, it's the 50-year anniversary of the New Orleans Investment Conference. So definitely a good one to be at this year in November. And Sean, thanks for sharing all the information on how you're looking at the precious metal sector, some of those utility and companies that are able to capitalize on the need for more electricity, and obviously in the nuclear power. And looking forward to our next conversation.
It's always a pleasure, guys. Thanks.